Hello everyone, in this video I wanted to go over market structure with you and just my slightly different take that I have on it. And again, I want to really point out here that market structure is rather a discretionary thing. There is no defined right or wrong way to really look at it. I'm just going to talk you through my preferred way of looking at it and why, I've taken this specific approach. So to begin with, market structure, everyone kind of uses it, looks at so many different time frames. You've got a daily, what's the daily doing? We'll turn off all these indicators, by the way. What's the daily doing? What is the weekly doing? What's the 15-minute doing? And really going from there. And a lot of people, even myself at the time, I could get confused and all these different contrary ideas where they all mismatch each other. And it's not easy to really have a really strict and more mechanical understanding of what structure is doing. I then went to look at my journal, and I'm looking at my journal, and something that sticks out to me is that my hold time on my trades generally are a few hours. Maximum really is a day, or if it turns into a swing trade, and that's not very often. Most of the time it's maybe a day at the most on the top end. So what I was doing was, well, I'm only holding trades for a day and I'm trading reversals. Doesn't it make sense to identify what price is doing for that specific day and track structure on a specific day itself rather than looking at all these different time frames? So what I'll do on any given day, for example, upon daily open, is track the structure from daily open rather than looking at all these different time frames. I am looking at different time frames, but mostly I'm limiting my look back period to a certain fixed point rather than going, structure from here. I'm setting it to a fixated point. So for example, on the daily time, or for the daily chart, for example, here, where I'm referencing to looking at what is structure doing on any given day, I'll basically put a line at where daily open is, and I'll track the structure from the open on the 15-minute or the 30-minute, generally the 15-minute in that case. But it really limits it down to make it a little bit more mechanical and more easier to identify the structure on any given day. This was on Saturday, so the open was this line here. We can actually mark this out with a actual ray. Okay. Here, and from there we can basically then go, okay, look, well, structure here has been making highs, lows. This is a liquidity grab of the highs, so this is still downward structure, lower lows here, and well, even here, where is this? We can mark this out here and go lower low, lower high, lower low, lower high in terms of liquidity, and then it continues the whole way down until you really see some sort of structure change at this point here where you see some form of candle closes. But rather than going, because if I'm looking at this on the 15-minute, realistically you would be going, well, this is clearly a range. You'd be going, well, this is sideways price action. But if you're looking at it on any given specific day, it's easy to identify what that trend is doing on the day. The reason for that as well is then we can try and anticipate almost what the daily candle is going to be doing in terms of referencing to a close. In particular, for example, on this day, you can see the price is downtrending, and using it like that, it is much more beneficial to me in identifying what price is doing today rather than getting this really confused mix up. Another thing to note is, again, so we're looking at a fixed look back here being like the 15-minute, okay, the daily, so looking at each given day and then tracking structure from there. Rather than that, we can go on the 4-hour, for example, and rather than looking at the daily as like a look back anchor, we can look at the weekly point. So I would then mark out, let's just imagine here, we'll mark out weekly open. Okay, and on this one, I would use the 4-hour or hourly, depending on how far we are into the week. You'd probably want to use the hourly. And then you'd want to track the structure from there. So the way I would really look at this, okay, really, really nice to look at this, but I would go, this is the weekly open here. You've put in a high, you've put in a low, okay? And now you've got two fixated points, high, low. Now you've made a high. Now you can look for a high, low to be put in, that's been put in there, and then so on and so forth, and track the structure, again, even here, where you would have then gone high, low, high, low, high, lower low, broken structure, and then you can then see this kind of broken structure there. I mean, this is now heading into next week, but you track it from the weekly open, daily opens, and so on and so forth, rather than having these arbitrary, I'm going to start it at this point here, I'm going to start it at this point. It makes a lot more sense, at least in my eyes, to be doing it this way, because it's more of a mechanical way of looking at it. And it kind of removes any sort of discretion where I have the chance to basically mess anything up in terms of my own discretion there. So, yeah, 15-minute for the daily, again, 4-hour/1 hour for tracking from the weekly open in reference to that. And then you can be using that to identify bias on the day. I've already got an idea of what bias is doing on any given day. And again, I've made a previous video in relation to market structure already. But this one here, I think, is more important, as I'm really going back, and this, this is only a more recent thing. Last few months I've really been doing, we're tracking structure from daily open, weekly open, monthly open if you want, and going from there rather than these arbitrary values. It makes a lot more sense as well, especially for daily bias. Imagine if we have, and I'll be going through this on another video, but you've got, this is daily open, right? Price is trending up, and you've got a high hit rate level to the downside down here, for example. Well, then I'm waiting for a change of structure on that day before then identifying, moving towards a high hit rate level. And it makes my trading a lot easier, and I'm hoping this will help you out too, and hopefully make a bit of sense from it, in reference to tracking from opens. So yeah, I'll call it that. Hopefully you lot found this very interesting, and I'll catch you all later.